Want to protect your money while maximizing your potential in the markets? In this video, we will dive into the critical strategies of the risk management, which will keep you from blowing your account and set you for the long-term success in the markets. So stick into the end of this video, because whether you're a seasoned trader or just starting out, these tips can make the real difference. Okay, so here is 10 key aspects and the strategies for the risk management. We can use fixed percentage method, where we never risk 1, maximum 2% of our account. If we trade on the prop accounts, I stick to the 0.5% risk per trade. I'm also using the volatility based position sizing, so whether I'm trading the very volatile markets, I reduce my position size. Stop loss orders. I think that it has to be clear for everyone that we need to protect our capital, so therefore we're using a stop loss. It can be in two ways. It can be a hard stop, where we set a level where the position will be closed automatically to protect our capital. And also it can be a trailing stop, where if the market is moving in our direction, we are locking into the profits to protect earned money against the reversal. Diversification. We can spread our investment between the different coins. So for example, it could be AI coins, meme coins, altcoins, right? And of course, the biggest part of our portfolio should be a Bitcoin. And it can help us to reduce exposure to a single factor. However, too much diversification can reduce the potential profits. If you know what you're doing and you can see some asymmetrical bet, it's better to bet it into the one asset. This is how the real profits are made. Risk and reward ratio. We should only aim for the trades where the reward has a higher potential than the loss. If the setup is not offering at least 1 to 2 risk-reward ratio, you should avoid it. Correlation analysis. Understand how the assets in your portfolio move in the correlations and the relations into each other. If you want to diversify, you want to have the assets with the low correlation. Leverage. Use leverage wisely. It can be double sword edge. High leverage can amplify the gains, but also magnifies the losses and potentially wipe out or fail your challenge quickly. Psychological risk management. You should stay disciplined and stick to your trading plan. I highly recommend to have your trading plan written down and read it every time before your trading session. When you get lost, try to find what was the mistake, why it happened, and turn this loss into the lesson. This is the only way how you will be improving yourself, because the losses and the mistakes are of course acceptable only if they are turned into the lessons. Scenario analysis. Use the simulations and the backtesting to see how your strategy performs in the various conditions. Be honest with the backtesting and don't try to portray the best conditions. Try to define in which conditions your strategy performs the best, but also find out when it is not doing so well. I mean, in which market phases, if it is good for the trending market, ranging market, or in the potential reversal. You need to know when is your best trading and high probability conditions. Capital preservations. Of course, for us as a traders, the main goal is to make the money. This is why we are doing it. But if we want to make the money, firstly, we should not lose the money. That should be the rule number 1. Your mindset should be set mainly to protect the capital instead of making the money. Focus to sticking to your plan, making the best trades with the correct risk management, and money will follow. And the last tip is like a quote from my hero Bruce Lee: be like water, my friend. What I mean by that? Markets are changing very quickly and you need to be adaptable to what is happening. like a water. Don't be married to your trades and the bias, and especially not into some specific coin because you like some people behind it or some influencers promoting it. Trust to yourself, and if you see that the market's conditions are changing, don't hesitate to leave the trade. Okay guys, so as you can see, the risk management is not just about preventing losses, but it's about ensuring that you can keep trading on the long haul. I believe that by integrating these tips and the strategies, you will increase your chances for passing the prop challenges and making it to the payouts. If you find these tips helpful, don't forget to like this video and subscribe for the more actionable trading tips. And drop the comment in the comment section and let me know which the risk management trading tip you will apply first. Thanks for watching, and I see you in the next video. Bye.